So, hello everybody, here we go for another one of these Substack videos. As usual, no trade calls, no recommendations or response for their own stuff because we're here for educational purpose only. So, thought we'd take a look at semis, SMH, talk of the town, and again, key in terms of the broader context because as most people understand here, it's very unlikely that the market can continue to sustain an aggressive squeeze bid higher unless semis are doing okay, right? Participating or at least doing okay. So here what we're seeing is, a 3-candle bearish reversal pattern, which we've seen before many times, last one after Broadcom earnings when we got about over double-digit correction. And right now, that's what's trying to play out. Now, clearly, we're going to be going into month-end flows, quarter-end flows, half-year-end flows. So there's a lot of other things going on in the background, but it's important for these videos, at least, I want to just look at the technicals and forget everything else. So how would I be looking at this? Now, we're still making a series of higher highs and higher lows. This is an absolutely incredible run SMH has had, from those yearly open, the all-time high print was about, 82% higher. But, if you go back on the chart from those last April 2025 lows, this is an absolutely, monster, almost 300% move. So going forward, as long as this pattern of higher highs and higher lows holds, and any kind of retracement here still holds this, right? So you could get into a situation where the 50-day holds, where off these highs you get a decent 10, 12, 13, 14, 15% correction, but we still hold this. Then your base case assumption is still that the upside rotation is in play, and the upside targets we have for this are 745 and an extension 828. So those are the continued upside targets if we continue going out in a straight line in that very nice technical channel. Now, because of the pattern and because of other things we're seeing in other charts, the bears do have a potential to force a little bit more downside. Also, despite the fact that July tends to be a fairly green month, but maybe there's a little bit of a chance for the bears. Now, keep in mind that, of course, looking at SMH, you have to keep in mind what's happening with the big weights. The biggest weight in SMH is NVIDIA. Then you've got TSM, Micron, AMD. And NVIDIA is at a key bounce zone, right? This is very bearish. We've been discussing, we were calling for a move back into 183 from this topping pattern. But here, this is a bounce zone, right? So this is the biggest weight. So, this is a key factor to keep in mind. If you look at TSM, the chart also with that 50-day coming into support this previous structure. So it's not looking horrible. If you're looking at Micron, this is a very ugly pattern, but it's still above the 10-day moving average. Again, I wouldn't be surprised if this ends up filling a little bit to the downside. If you look at AMD, still not looking horrible at all. If you look at Intel, still not looking horrible at all, right? So the supporting the bigger weights mostly look okay. But going back to SMH, again, if it breaks this 50-day, then there's a lot of downside, squeeze, poor structure to fill. And what I would be looking at is, a potential move all the way back into these 420s. You have a big gap and run here. You've got the 200-day moving average coming into play. So I think this is a very interesting zone. So I think going forward, just keep it simple. As long as it's holding this series, you can come every day and look at what the Kospi is doing. But as long as it's holding this series of higher highs, higher lows, the structure is still intact. There's nothing much to worry about. To the downside, loses this area, then you've got a much bigger correction coming in play. Now, the last thing to keep in mind is, of course, markets can go up, markets can go down, but most people forget they can also go sideways. So what to look for in a sideways pattern? Well, what I would focus on is, again, this series of bearish reversals. And you see that you've got kind of like the 10-day moving average protecting. So I think if the market is coming back up, right, and you see it pegged around this 642, 643, this whole area, and it doesn't really get enough traction, especially if it breaks above this area and you don't see an imminent squeeze back to fill this gap, then you start to have to be a little bit more worried. So again, if you're structurally bullish, what you want to see is this series of higher highs and higher lows respected. But what you want to see, irrespective of whether we bounce from here or we bounce lower, what's important is you want to see squeeze action to the upside, momentum to the upside. And that means that if we trade back above the 10-day, back above this area, and you don't see that momentum come in, then you've got, it's flashing amber, right? It's not outright bearish, but it's flashing amber, because that could mean that either we're going to come in and kind of fail here and then come back down, and at that point a second test of this trend line, assuming we bounced, is going to be weaker, so it's easier to break. Or number two, that's why I said amber, not outrightly bearish. It could mean that just we're going to be consolidating in a little bit of a chop zone as we get through the summer months, as we get through the next headlines that are likely going to hit. Okay, so that's the way I'm looking at this. Again, let me know if you like these updates. I'm mostly doing them here on the free Substack on SPX, DXY, gold, because I think those are the most interesting ones, or the frameworks that most people are looking at. But if you want me to here and there sprinkle in some of these sector ETFs, some key stocks here and there, let me know, and I'll try and do a little bit more of that too. Okay, wishing everybody an awesome one. Thanks. Talk to you guys soon. Bye-bye.